So I'm going to cut straight to the chase here. Many people have already done this, but the biggest financial mistake that you can make right now is cha-ching! What's up everyone, welcome back to another video with the Millennial Finance. With the bear market going on for a few months now and a recession that is very likely on the way, many people are really starting to panic. And it makes sense too, with hardly any positive news coming out from the media recently. Couple that with headlines like these and it's easy to think that the world is ending and we're all going to be doomed. With all of this information flooding the headlines, it's very important to avoid the biggest financial mistake that you can make that will most likely delay your retirement down the line. So I'm going to cut straight to the chase here. Many people have already done this, but the biggest financial mistake that you can make right now is to stop investing your money. I know, before you guys come at me with your pitchforks, of course, there are some criteria to this. Firstly, you of course need to have your necessities in place. Prices of stuff has been going up. Some people have seen their salary cut, or some people may even have gotten retrenched. So the first thing you must do, of course, is to get all of this in order. Secondly, you must of course have your rainy day fund set up, and it's especially important in times like these. Thirdly, this advice is mainly for people who have at least 5 to 10 years before they want to retire. If you tick all of these boxes, then hear me out, because this is one of the biggest mistakes that you could be making right now. So many of us started investing in 2020 or 2021. Lockdowns got us bored, people had some extra cash, and investing was the hot topic at the time. So many of us, especially millennials, started our investment journeys because of this, and it's great because it is one of the most powerful financial tools that can help us get to where we want to be. On top of this, it was especially good because we were in an insane bull market that really blew up everyone's portfolios. Investing was easy at the time, and many of us were left thinking, why didn't I start this earlier? Ironically, in my opinion at least, this was probably the worst time for any of us to start our investing journeys. The reason for this is that what we saw in 2020 and 2021 in terms of the bull market was truly a black swan event. It shouldn't be that way, and it probably will never happen again. So many people got used to those kind of returns, seeing a portfolio go up in price every single day, buying any stock that we like and seeing it moon. But as soon as things flipped bearish, then reality kicked in. As a result, many investors who started during this period have already left investing, which is definitely a shame. It would have been much better if we started an investing journey, in normal times, markets going up and down 5-6% a year, because that way we would have stuck the course because we know what to expect. But because we had such a good return at the start of our investing journeys, we expect that moving forward, and when it doesn't happen, many people stop. But despite everything that has happened so far, I still strongly believe that investing is the best and to some degree the only way for us normal people to build true wealth. You may have heard this before, but you're not going to get rich saving money. Well, I guess technically you could, but you would have to invest that saved money. So let's pull out this graph again. Let's say you save 1,000 ringgit a month for 30 years. That is quite a big amount, and after 30 years, you will have $360,000. Invest that same money with an average return of 6% per year, and your $360,000 now becomes $950,000, which is a massive difference. Who wouldn't want an extra, 3 times your money? And it's really one of those few things that, no matter who you are or where you come from, you kind of have equal access to financial markets. Yes, maybe there are certain financial vehicles that are only available to rich people, and maybe some other people even have insider information to make even more gains, but to get a 6% average annual return, anyone can do it through index funds. The worst part is many people are letting the results of 1 or 2 years of bad financial markets impact the investing journey, which should last our entire lifetimes. I understand that times have been incredibly tough, and it's very demoralizing to see your hard-earned money in investments dwindling down every single month. Things can and will look bad in short term, but every time this happens, we just gotta zoom out for a bit more perspective. I'm not saying that this will happen 100% for sure, but over time, stock markets usually do tend to go up, and being down is all just part of a cycle. Even economies have cycles. That's why we go into recessions and no one panics, because that is just to be expected. The truth is, no one knows how bad the market will end up and when the bottom will come. Yes, you could try and time the market, but what if you miss it and you don't end up investing your money? Another benefit of continuing your investing process throughout times like this is it helps you build habit. Regardless of where the market is or what it's going to do, you have an investing process. Let's say that's to invest every single week and you just stick to that. This is especially true for those of you who don't care about stocks, you don't care about the economy, you don't know what's going on, but you do want to passively invest. Maybe it takes 5 years for the market to go back to all-time highs. Maybe it will just take 1. We will never know, so for those of you who just want a passive journey, then just continue on your investing process and don't try to time things. So, having said all of that, I truly believe that this is one of those generational opportunities for us to build long-term wealth. Bull markets make you money, bear markets make you rich. Over the last 100 years, every time those indexes dropped by more than 30%, which the Nasdaq already has, those who just continued DCAing their money every single month saw an average return of 10% per year, which is way higher than the 6% we estimated earlier on. This will definitely give us a boost to our portfolios long term because we have been given a very good opportunity to buy stocks cheap. The funny thing is, investors love buying stocks when it's going up, but absolutely hate it when it's going down, even though it's the very same company. I mean, I guess it's understandable. We like to see our money going up, but we never like to see it continue going down. I'm not gonna lie, this kinda happened to me as well. In the mega bull run over the last 2 years, I couldn't stop buying more stocks because I had to FOMO in. I didn't want to miss out on a generational opportunity, but looking back at it, when things were going way up high like that, it was probably not the best time to buy. When things started going down, I suddenly got way more selective and I didn't want to pump more money in anymore. In truth, that was a naive decision by me at the time because I am still relatively new to this game as well, but what it will do is it will help me prepare for future bull and bear markets. All I know is over the next 6 months to a year, I'll be deploying as much cash as I possibly can into the stock markets, and I will also continue my DCA process. I check financial news every single day, I read up on the economy, and I still have no idea where we're going. So to me, I must have a portfolio of ETFs that I just continue DCAing in because no one really knows when we're going to bottom and reverse back up. Even if this turns out to be a lost decade where none of us make any money for the next 10 years, then I don't really mind because my investment thesis is way longer than that and I still have many more years before I retire. After all, what other ways do we have to build our money passively like this? So thanks for watching this video to the end, guys. I really hope it helped you and I hope that you guys will still continue on your investment journeys. If you want to start investing, then check out some of the options. We'll leave it down below with our links so that you can support the channel. Give us a huge thumbs up if you enjoyed this video and subscribe if you haven't already. See you guys in the next one. Peace out.